Hey, welcome back to the Hub channel. My name is Brandon, and we have another great show for you today. We're going to be doing the Delta Neutral Breakout Show. And of course, as always, I have Jeff with me in a second. He'll be in here. But in today's show, we're going to be covering Jeff's last trade, what he did, how that's playing out. We're going to be going over the top headlines in the market, what the market's doing, go over some other stuff coming up in the market, and of course, as always, some stocks that we're watching and another trade we're going to talk about. Now, Jeff, get in here. Jeff, if you do not know, is a professional money manager and senior strategist over at the EWO channel. Our resident hike and a she guy. Everybody needs a hike and a she guy. You know, you have your car guy, you have your mortgage guy, and you have your hike and a she guy, right? You got Jeff. And Jeff, obviously, thank you so much for being here again today. How was last week's trade doing? How are you doing? We got Christmas coming up. How are you doing personally? And then let's talk about last week's trade here.
Oh, Brandon, everything's going great. This is the last full week of trading before the holidays, last full trading week of the year. So, we have a full week. Lots of stuff coming up. We'll touch on that in just a moment. But let's take a look at the trade we gave out last week. That was on Comcast. It is a delta neutral trade as always, and we are running up to the top of our break even in this calendar spread. Not a problem. Anytime you get a move like this, you expect a little bit of a pullback, which actually the timing of that could not be better. I mean, rally up, test the upper break even, then pull back, center yourself in the middle of the body of the calendar. That happens quite often. So I'm not too concerned about this right now. And over the next 2 weeks, we do have a lot of time. We have 6 days where, coming up where the market is closed versus 8 days that the market is open. So after today, we have 4 days of trading this week, then 3 days close, 4 days of trading next week, then 3 days close because of New Year's, and then another shortened week on the other side of that. So this is a great time of year to be doing what we call these theta-friendly trades, where we're looking for time decay to be taken away from the value of an option. So, Brandon, we're fine on Comcast for now. We can move on to other things here on our agenda.
Yeah. Okay, it sounds like we're just watching Comcast, and you did mention the short trading week. Obviously, that does factor into how people trade this time of year. I know it always has, and I don't know in what way it factors in. But what do you see as far as headlines? What's happening in the market? What are people talking about mostly?
Well, believe it or not, this is still a very busy time of year in many areas. Let's touch on the top headlines here as we go into the week. Really, the big news today was on Nippon Steel buying U.S. steel for almost $15 billion. This was interesting because there was another potential buyer, Cleveland-Cliffs, which nobody was really excited about that offer. Neither board, neither company was really excited about that. Nippon came out of really nowhere. What's interesting here is that Nippon is going to keep the U.S. Steel name. They're still going to be located, their headquarters are in Pittsburgh. The headquarters are still going to be located there. They're honoring all union deals. It's probably one of the most cleanest potential mergers that we've seen. So they just need to get through the regulatory hurdles, and it'll move forward. But pretty clean all around, because believe it or not, even though it's Nippon Steel, they don't have a lot of similar competitive segments. They do very different things, and so combining together will actually make possibly steel prices decrease a little bit. This is a continued consolidation in the space. Worthington Steel got bought out, I believe, about a month ago. So interesting. Don't really have a trade for you in this sector, but interesting that went on. And then Adobe is moving today upon their deal with Figma that they're calling it off. And that was a $20 billion deal. And the regulators just were not happy about it. And so Adobe is kind of just giving up on it. I think they'll pay, I believe the headline was $1 billion to drop the offer. and that really shouldn't affect the stock too much. In fact, last I saw, in fact, let me just look over at another screen here,
I
and
mean,
last I checked,
what's
Adobe
a
was reacting
billion dollars
positive.
between friends, you know?
Yeah, right. What's a
I guess.
right? Yeah, so Adobe's
Let's
up
take off the offer, but a
almost
billion
3%.
bucks. Okay, you're good.
Yeah, right. So Adobe's up almost 3% today on that news. So yeah, market liked it. And then really kind of an interesting situation over in the area of shipping. You know, we just had some recent news that container costs were dropping like a rock. In fact, I have a close friend who does a lot of international shipping, and he had paid, I believe, around $23,000 or $24,000 for one container to ship from Europe to the U.S. Now that's below $2,000. Incredible drop there. But with that said, now there's a lot of activity in the Red Sea. This is causing a lot of carriers to begin to reroute ships, and this is regarding piracy in the throughout the Red Sea, and it is getting to be quite the mess. The U.S. military is getting involved. This is being reflected in everything from potential prices in consumer goods to oil prices. Okay, so that Suez Canal, it just shows you how precious that is to avoid going around the southern tip of Africa. It adds 2 weeks to shipping, and also some routes need to be totally reversed because they can't go up through the Red Sea and the Suez Canal. So very interesting there. And lastly, on our kind of headlines is we still do have a lot of economic reports this week. We have consumer confidence, we have jobless claims, durable goods, and then something called core PCE, which is one of the most ridiculous reports because that is personal consumption. Okay, PCE, personal consumption expenditures. This report takes out food and energy. Okay, and then so we're supposed to gain some sort of valid economic number when you take away two of the most critical parts of costs that the consumer faces, which are food and energy. But anyway, we have all these earnings announcements this week, Brandon. So it's a busy week.
I can't believe, things are going so hard into the holidays, and this is just so much different than when I was growing up back in the 20s. When Christmas would come, we would take the whole week off, but now we're doing $14.9 billion acquisitions, but that sounds like a really good one. But it's interesting, guys, that it's a Japan company, right? And so they're buying this thing and just kind of like leaving it. They're basically a stockholder with 100% ownership because they don't want to like put their hands in the whole mix, which is kind of cool, I guess, once you think about it. But let's take a look at markets. I mean, let's
steel story. That is, their symbol is X. Okay, it's just
yeah,
one of anytime you have a single letter stock, that is a stock that's been around for a long time, and I would have hated to have seen that disappear.
Yeah, I agree. So I am glad they're keeping it like it is, and I think everybody in Pittsburgh is going to be happy with that too. So hopefully, win-win. What are the charts looking like? What are we seeing over there?
Well, let's jump in and start talking about a couple of areas in the markets. We're up about 66 basis points today on the S&P 500. All right, we're kind of rallying higher, and but this is still in that 3-day range. Okay, we gapped up on Thursday. Friday we had triple witching. Okay, and S&P rebalancing. So we expected volume to be higher. A lot of times that doesn't really move the market. There's just incredible volume. And now today we're kind of settling back into looking at broader, either economic or business news. So the markets the broader markets are pushing higher today just a little bit, but we're up here against a little bit of minor resistance on the S&P. And since I got tagged as a Heiken Ashi guy, we'll bring in our Heiken Ashi candles, and you can see here that today's candle, like the past days, other than the previous candle, which does have a little bit of a wick on the bottom of it, this indicates a good, strong trend to the upside. So as long as we break through this 470 level, okay, which we're at 471.5 right now, we can close above there. We're definitely going up to 480. That's the next move. I have a year-end target of 485, and that is really within reach. Okay, so I know that's not big news now, but I laid that forecast out 4 months ago on our platform when I gave out my year-end target, and I didn't, look too good at the beginning of November, but man, Brandon, the market took off, and now we could really hit that number as we get into the end of the year.
Yeah, I almost thought the market was going to roll over, but it looks like, holy cow, ever since that Fed meeting when they were a little bit more dovish, things have just trended upwards. And it looks like it's a combination of like a Santa Claus type rally, but with the Fed and what they're doing with interest rates, things are looking good.
Right. So here's the NASDAQ, the Qs, tech heavy, obviously. Good looking chart here, moving higher. When we had this big move up into early last week, then we had 2 quiet days. Now we have another push higher. That's just healthy. Okay. That's a healthy move for the bulls. If you're long, you can stay long. Just, roll up your stops. If you have missed this move, you could enter, but make sure you either hedge or you have stops. I'm not a big fan of stops personally, but you can hedge and protect against downfall. But the Qs are moving higher. Small cap IWM, we broke out of this long wedge that I had down here. In fact, I can probably go ahead and start taking some of that off. But we're consolidating on small caps, and this is interesting because we're up about 21 basis points on the day, but we have this little island developing up here, and depending on what interest rates do, this could really affect a lot of the small caps as well. But we're consolidating after that gap up last week, and but the trend there is still higher. Now, as we move on through the charts here, we will take a look at USO, which are our kind of proxy for crude oil. It's not the best proxy, but it's a very popular one. And you can see we're off the lows. Okay, this is, again, news on the Red Sea activity, oil prices kind of bouncing up. I noticed this at the gas pump over the weekend. I pay attention to prices. Now, gas prices, the refined product of crude oil, aren't a direct reflection of what's happening with crude oil itself. However, it does have a loose connection, and I did see prices kind of rebound at the pump a little bit, maybe because of the Red Sea, but also maybe because of the Christmas holiday travel season, prices coming up a little bit at the gas station. The overall trend here is down. Okay, I can just probably put a little trend line in here, and we opened higher and probably tested that line a little bit. Let me throw some moving averages on here. Oh yeah, look at that short-term moving average is providing some resistance here. You don't see the long-term moving average until now, just because I didn't have all the data in there. Okay, but we see it now, and it's slicing through there. So the overall trend is down. We're just off the lows a little bit. Now let's look at some metals here, specifically gold, which, what's interesting here on gold is we had this nice rally, and we pulled back a little bit, found some support. Big day on Wednesday last week. And this is forming what's called potentially a little zigzag pattern. Okay, and where we move down, and we could probably do some calculations on where this pattern would go. But if we let's just we'll take highs and lows just for kicks and grins. I like using closes, but we could see the potential for this. If this pattern works out, we could retest that 180 level in gold. I'll leave that indicator there, and we'll see if it follows that pattern. for me, if the trade here, since we're all about the trade, okay, I want to be giving you information that you can actually act upon here, other than just filling your head with a bunch of mess. All right, my trade here would be bearish if we drop below that short-term moving average. If we break that 21, this is a 21 period moving average. If we break below that, I would be looking for a move down to 180. If we break the previous pivot high here around the 188 level, I would look for a move higher. I wouldn't even necessarily worry about this previous pivot back here, even though it is a more major pivot. I would move higher. So that's the trade on gold. Okay. Zigzag pattern forming, break below short-term moving average. We would target 180 as our short. Otherwise, we're long probably up to 195 or beyond if it continues to move higher. Now, silver was in a free fall, and it rallied hard, really off support last week. It's come up to the short-term moving average, acting as some resistance here, and pulling back just a little bit. This is kind of the same story. We have another little zigzag pattern here. I'll go highs and lows here, and now this one I'm targeting this 100% extension. Okay, well, let me just secure that. Well, my mouse doesn't want to secure it there, but sorry about that. It doesn't want to stay. But anyway, I'm targeting that 100% extension, which is at 1950, and that is would be if we break. Really, we're below that moving average. I would probably put a short-term moving average, like 10 period, on there, and see where that ended up to enter that particular trade. Okay, what else? So let's move over to bonds. Now, bonds, man, what an interesting kind of period for bonds. We have a lot going on. So I'm going to spend just a couple minutes here talking about bonds. Okay, we came right up and tested this previous resistance level, which is right below 100. Now we're looking at TLT, which is the 20-year plus Treasury bond ETF. All right, you can see this big, powerful move that we've had. And this is, well, this little tool does not want to behave. So I'm going to refresh my screen here, and we are going to take a look at TLT once again. Sorry about that. I'm going to get a little sticky tool working. All right. So we have this resistance line off of this previous area of support. We've come right up to that. Now, what's happened here is when you get this kind of move in bonds, you're going to have the corresponding drop in interest rates. And boy, have we been seeing a drop in interest rates. So this is TLT. Now, the short end of the curve is going to be SHY. This is the 1 to 3 year Treasury bond ETF. Now, this, okay, big spike and then an even bigger kind of pullback is going to be noticeable in a chart I'm going to show you in just a moment here. So overall, we do have bonds continuing to move up, which is forcing interest rates down. Okay, let's take a look then, Brandon, at what this means kind of to us as consumers, because there's quite a bit of interesting news as it relates to bonds. This area is more active. Normally, bonds are boring. I mean, they move a little bit.
No, yeah. I mean, I once you started saying bonds, I was out 100%. So, I know that bonds are correlated a little bit with mortgage rates. Are they not? Or are they?
Well, yeah. I mean, you do have an impact of bonds on mortgage rates. In fact, let's take a. I don't often like to show the same type of general chart week in and week out, but I do want to show you a chart that I showed you last week, which was the average 30-year interest rate because literally we've gone from 7% interest rates on a kind of national average to about 6.5% in 1 week, or literally in a week. That 50 basis point move in a week on bonds is absolutely huge. Okay. I did hear in my area, which is Texas, southern United States, FHA mortgage went off at 5.99% last week. So, boy, are we really dropping as we on these on the 30-year bond. So again, this chart that you're looking at right here, normally I showed you this last week and we were bouncing right at 7%. I was a little concerned that might hold, but nope, down we go. Look at that steep drop in the average 30-year mortgage price. Now, bonds also have the effect, again, on short-term rates versus long-term rates, and we use this as kind of an economic input. It's not a trigger for any type of trade. It's just something we look at. And on our next chart, you're going to see the inverted yield curve in very clear terms. The reason I brought this up this week is because we've broken below that 50 basis point level. Okay, you can see that we touched 100 basis points not once but twice in the past. That July 23, when we touched 100 basis points for the second time, that's when we had Signature Bank fail and another major bank fail. Two of the largest bank failures ever were caused by really that move, that inverted yield curve, and then the curve started flattening. And I really honestly thought we would get into a normal bond structure where long-term rates were higher than short-term rates. That has not been the case. We got up here to about, in the teens, I think it was, and then down we go. We start to widen. This means the 2-year and under are paying a lot more than the 5, 10s, and 30s. And that's not a healthy structure for the market. And I think what this has to do with is there is still some underlying concerns about something you're not hearing from the Fed. The Fed is focused on the interest rates and how the consumer and jobs, but they are not talking about their balance sheet. They're not talking about their balance sheet at all. This is being kind of swept under the rug a little bit, and that is very concerning. We're going to have to watch that effect on our $8 trillion worth of debt as we head into 2024, Brandon.
Jeez, that sounds like a lot. That trillion. That's about as much money as coming into crypto next year. So here's what we need to talk about, Jeff. I know that. I mean, that's what they're saying on the news right now. I'm just watching it. So anyway, those guys are crazy. But I know that we still have earnings coming up. Even though earnings have kind of died down, we still have a couple notables coming up. What are you thinking about those?
Absolutely. So believe it or not, there's a lot of activity even now, right around Christmas. Stock traders, those of us in the field, there used to be a time when we would take vacations, take 2 weeks off, but technology and things just now make it just too easy to stay in touch. And this week we have some really kind of name brand stocks that have earnings. This chart is created by a group that really focuses on market cap and option, those that have unique option volume, meet a unique criteria for options volume. Okay, so tomorrow we have Accenture and FactSet Research before market, then after market. Federal Express announces. That'll be an interesting announcement going here right before Christmas. Okay, it could be an interesting report the week before Christmas to see what is the impact of the consumer, because people shopping on Amazon and eBay and Etsy and all these others, and how is that being affected, and what how is FedEx doing with all that. And then as we get into the midweek, we have General Mills and Toro, Winnebago, Micron Technology, another tech company there. And then Thursday, along with our economic announcements on Wednesday and Thursday and Friday, Thursday we have CarMax and Nike as two big names that are scheduled this week. CarMax and especially Nike, another big consumer company, a big retailer. It'll be interesting to see what their numbers are and see how the consumer is behaving as we head into Christmas, Brandon.
Yeah, I love watching this time of year. So, of those and of what's going on, why don't you give us your top plays and maybe a little trade for everybody here?
Well, yeah, I love when we get when there's good earnings, when there's companies that meet certain criteria with earnings, we always like to kind of place a trade on them. And you can either be a buyer of premium or a seller of premium as you go into that earnings announcement. Normally, we're buyers of premium. I'm expecting a big move out of certain names. Okay. Then when there's other times when I want to be a seller because I just don't think the stock is going to move as much as it's anticipated. But this week we're back to buying premium. Okay. And this week I'm looking at a company called Accenture. All right. And if you're not familiar with the stock, okay, this is a $340 stock. All right. This is not, a little $5 stock. I'm always amazed. I won't get on this soapbox, but I'm always amazed at how many people just love trading cheap stocks. They're cheap for a reason. But I'll get onto that soapbox another day, Brandon. We're looking at Accenture here. This is a $340 stock. And what's interesting is that the pricing of this is they're expecting a 4% move, even though the stock historically moves about 7% around earnings. Okay, so this presents a unique opportunity. Pricing for the straddle. In this case, I'm doing a strangle. You'll see the flat bottom there on that black line indicates that this is a strangle, meaning I'm doing two different strike prices, same expiration date, but two different strike prices. And I'm expecting then if this is priced for a 4% move in the stock, and it moves even 6%, we're going to have a nice little profit in the trade. So our trade for this week, Brandon, is Accenture. This is a breakout trade. We'll be done with this by Friday. Earnings on Accenture happen. Let's see here. Tomorrow. This trade would need to get put on right away. We have still 30 minutes of market action today. So this is tomorrow morning, Accenture declares. Okay, tomorrow morning. So if we still have 30 minutes in the market of trade, so easy to get on a straddle or strangle on Accenture, even though implied volatility is high. It's pricing in right now about a 4.5% move. Historically, this stock moves about 7% around earnings. So we're looking for that type of move as we head into that announcement tomorrow.
I like that trade, and I like it. So you're pulling that. You're looking for maybe Friday, so that expires. So you got to get on that trade pretty quickly, Jeff.
It expires Friday, so we'll be done.
Yeah. So you'll be done at least before Friday, or else it's going to expire. Anyway, so how can people find out more about the type of trades that you put on?
Well, we have a free guide that you can download. Just go to ewotrader.com/straddle. And I have a guide that kind of shows you how to trade straddles and strangles in general. Okay. Now, this is a common, easy option strategy to trade. And it's one of the first strategies that you learn when you learn how to trade options. However, most people will put a straddle or strangle on around a stock and it's not appropriate. The stock just doesn't move enough, or options have been priced that will create a loser if you put it on. So a lot of people give up on the strategy. My guide is going to show you how we trade them and how we trade them around a specific event like earnings. So download our guide at ewotrader.com/straddle, and you can see how we trade these stocks around earnings. And that is the way to properly trade a straddle around an earnings event. So Brandon, that's it. I want to wish everybody a Merry Christmas and a Happy New Year, because we will not be here next Monday. So in fact, we're probably going to end up taking 2 weeks off, but we'll see. We'll see what we're doing. Maybe we'll do them on Tuesday, and you can see the recording, but we'll find out.
Let's see how that plays out. Well, thank you, Jeff, and I appreciate it. Yeah, and hopefully everybody has a great holiday season, and we'll just figure out where things go coming up, whether we can see your trades, how they play out, and that kind of stuff. Jeff, your insight is very valuable, and we appreciate it. If you guys have not subscribed to the channel, please do so. Go ahead and hit that like button below, but we will see you next time back here at the channel. Take it easy.